Hello and welcome to another Vendavo webcast. My name is Mitch Lee. I'm the profit evangelist for Vendavo. You've probably seen me in your email inbox as the Profit Prophet, and occasionally I'll be referred to as the Minister of Margin, the Rabbi of Revenue, the Bishop of the Bottom Line, and right now I'm your humble host. Today we have a special topic, pricing and the C-suite. It's aimed at decision makers and those that need to help inform those decision makers so they can choose the best path forward and take action now. To lay out the 5 key points for you, I'm pleased to be joined by Stephan Liozu and Bruno Slosse. Now, Stefan is the Chief Value Officer at Thales, the founder of Value Interruption Advisors, and he teaches in the PhD program at Case Western Reserve University in Cleveland. And he just authored a new book titled Pricing Strategy Implementation, translating pricing strategy into results. Stefan, a few words of introduction from you.
Oh, great to be with you. Thanks for the opportunity to address executives about the importance of pricing. So happy to share my thoughts and collaborate with Vendavo and Bruno.
Thanks, Stefan. Bruno, of course, is president and CEO of Vendavo, having led the team here for over 4 years. He brings a deep set of business leadership experience developed across a broad number of international technology based companies. Thanks for bringing the CEO perspective, Bruno.
Thanks, Mitch. Really pleased to be here. Looking forward to the dialogue with Stefan, which is always incredibly insightful. And obviously, I've had a tremendous amount of experience over the last 4 years talking with C-suite customers and prospects on pricing. So happy to participate.
Thanks much. For all attendees, please note that we'll be taking questions during the presentation. We'll try to address as many as possible during the discussion. You can use that chat box that you see on the ReadyTalk application. And please be sure to join the social conversation using the hashtag you see on the bottom of your screen. And now I'll turn it over to Stefan to get us started. Stefan, let's lay the foundation. Why should organizations look to focus on improving their pricing and improving their profitability, especially right now?
Well, I'll be frank with you. It's the world is changing, and today we are in unique times where we see, things going in one direction at the same time, other things going in opposite direction. So whether you're talking about costs, some are going up, some are going down. We have the introduction of new dimensions that are affecting pricing, like currency wars, the new tariffs, which are, obviously impacting raw materials. We have exploding labor rate in some areas. Just on the cost side, it's so dynamic right now that it just reinforces the need to track things with technology. And the customers obviously are continuing their quests of being more sophisticated with investment in technology and pricing teams and purchasing teams. So the customers are also changing every month, every year. And because all these situation, I would say at the global economic level are very dynamic. We see lots of competition. We see shifting trends in companies attacking some regions or some markets, and the competitive intensity is very, very high right now. At the same time as the economies are slowing down. So, and obviously, technology cycles have increased the speed of change. We have a lot more transparency. We have a lot more pricing transparency and faster ups and down cycles. So it's the new reality right now is fast, it's dynamic, and I would say the executives in the world need to have their all their senses open because it requires a new level of mindfulness to keep track of all that. So what does that mean for executives is they're facing forces of disruption, and you have to be mindful, and you have to be really scanning what's happening in the world, in the C-suite, with the help from all the functions that are playing in the C-suite. So it's not just the marketing guys that have to pay attention to what the market trends are, but also the procurement guys that are looking at what's happening in raw material, strategic sourcing, the IT guys that are looking at trends in the cloud, for example, or trend in AI and other machine learning components. So if you look at the right side of this slide, there's, the forces are pretty intense. From some of the things that I said before, increased competition, business commoditization, because everything is transparent, the emergence of these e-commerce platform that are really opening up, not only on the procurement side, small suppliers have access to the world, but on on the customer side, they have choices, a lot more choices, and prices are transparent. Technology is not any longer huge capex investments. It is available for small and medium businesses through the cloud, through the SaaS model, and marketing is digitalizing. So this is why constantly looking at disruption and how executives have to constantly pay attention and not forgetting the value and pricing side, which is essential in the go-to-market strategy.
Yeah, and Stefan, just a couple of thoughts here, but one of the things that we see engaging with customer and prospects is that there's a couple key things. So speed of change is accelerated. Whether you're a Fortune 10, Fortune 100, Fortune 500, you're confronted with it. I think there are many more variables that need to be managed, many more new competitors, and there's way more margin pressure today than ever before. So, from a pricing perspective, you got to go from a more static to a very dynamic environment, to your point here. And if it's digitized, you can really focus on margin improvement, which is key.
Yeah, and that's tremendously important in today's business environment. There's certainly a heightened fear of economic slowdown, more uncertainty, more pressure to make those decisions.
So essentially, it doesn't change the game in the C suite because the executives in the C suite are in constant quests for additional profit. And at the same time, the world around them is changing fast track. The good old traditional way of finding profits, it's just not enough. And the reality is that the source of profit improvements have to be diversified and they have to be adapted to the changes in business dynamics. So traditionally, you would say, where do executives find profit? And it would be cost improvement, Lean Six Sigma, right? You would go and acquire a company for scale. You would look at outsourcing some of the traditional back office processes. You would look at your capex and move that into maybe into different programs and change the balance between opex and capex. So what we're saying today is the emergence of these buckets of growth and buckets of, I would say, activities around sales enablement, sales effectiveness, pricing excellence, data analytics. They also are great sources of profit improvement and they cannot be ignored, right? And this is a little bit of the dilemma where in the C-suite, executives have maybe a more traditional view of how profit can be optimized, where in some area of the business world, they have already moved towards more progressive sources of profits, like I mentioned before. So closer to maybe B2C or some fast-moving environment in the startup world. So looking at some of the B2B world and industrial world, I think they really have to adapt their views and find and diversify their source of profits. It is all about fighting the myth that operational excellence is a strategy. Operational excellence, which by that I mean the constant search of cost improvement, cost containment, cost optimization, it's not a strategy. It is a way of life. It is a search that never ends. So obviously, we want to create value proposition, business models that are very profitable, that are leveraging all the technology and responding to customer needs. But that doesn't mean we're going to spend, we have a blank check to do whatever we want on the internal side. So some companies have the duality of having go-to-market excellence with procurement and sourcing and cost excellence at the same time, which helps, I would say, maximize the margins in between. But there is a traditional thinking that and you see that in corporate strategies where we have to be the best at cost excellence. Well, that's not a strategic statement. This is a requirement in today's world.
Yeah, and Stefan, I think you've heard us talk about sort of commercial excellence. Some of the improvements that you talked about earlier, M&A, cost cutting, even new innovation take a significant amount of time. However, if you look at sort of commercial excellence and the ability to be nimble, to be fast, once you've got a digitized platform, it's your quickest path to value. It's your quickest path to margin improvement. So we feel strongly about what you're talking about here.
Yeah, Stefan, I would have to say I really appreciate, really love how you've flatly stated that operational excellence is a hygiene factor. It's something you must have to proceed, must have to be successful.
So, in my experience, in my humble experience with pricing in the business world, as you guys know, I was working in the corporate world more as an operational role, which is general manager and president and CEO. and then the last 10 years working deeply in pricing, directly in value and pricing management. I think we still have not cracked the nut, and there is a what I call the wicked problem of really going in the C-suite and understanding the perception of pricing and how they prioritize pricing in the overall pipeline of investments. So on the left side, it is clear it's been well published, well documented, well analyzed through conferences, through books, through papers, independent research that pricing is a very strong lever of profit. Whether you go to consultants like the McKinsey of the world, pricing society, the best scholars like Roger Best, or Mr. Kotler, and then the work that you guys do in documenting the impact of software, pricing software. It's strong. And yes, maybe we haven't made enough noise around the success, but if there is enough documented trail, I would say, and nuggets to show that pricing is a strong lever. On the right side, though, what is happening today, if you look at the last 20 years or even the last 10 years, we see a price management software space that's still very small compared to other that are exploding, like sales enablement, CPQ, CRM. So more around the marketing dimension. We're talking spaces that have gone from 5 billion to 30 billion. Sales enablement is a 5 billion market space in the last 5 years. At the same time, we see that the biggest firms not all having pricing structured and pricing team in place, which is for me puzzling. I recently conducted research around the global Fortune 500 companies and the top 500 industrial companies in the US, and you see some of the rate of penetration of pricing. It is relatively low compared to other functions like supply chain, data analytics right now, where these functions are well ingrained in the C-suite, in the culture, and at least in the maybe below the C-suite at the first level of management. So we haven't yet gotten to the level of penetration that we should be at after 40 years of experience as a pricing discipline, after having shown so many nuggets and so many stories of success from some of the biggest companies in the world. We have an issue in the C-suite.
I mean, two quick thoughts. So my engagement with a couple different CEOs is that I think our focus needs to be less on the complexity of pricing and more on the value stories and the success stories that are out there. There are many, and I think we need to put a spotlight on them. I think one of the challenges that I see also is that the pricing function needs to find a way to report directly into the CEO, or it needs to become a bigger, they need to sit at the big table, if you will. Sales is a key piece that sits at the big table, reports into the CEO. Pricing, perhaps through the CFO, needs to sit at the big table, and we need to have bold discussions around what the capabilities are and what we can do. Because the highlights that are made on the left-hand slide here, they're real. If managed appropriately, they're very real. And I think once they are achieved in a company, then they take a central place in the CEO's agenda.
So when I say it is a wicked problem, I say it very seriously. And with my work in academic research and coaching lots of different PhD students, I ask them to find the wicked problem to make sure that the problem is wicked. And the wicked problem is a problem that is difficult, impossible to solve with a traditional thinking, right? I think 40 years in existence in pricing. I've been in the space for 10 years, and I'm humbled by some of the statistics that are coming out. Yes, we've made some differences, and yes, we are moving the needle. But I think something is happening at the top level. I think at the perceptual level, at how pricing is implemented or designed in overall transformations, and until the profession, with the support from companies like Vendavo, consultants, and the best of practitioners, until we pull together and we have an intentional strategy to address these perceptions in the C-suite, or at least to change the way we are prioritized or deprioritized in the C-suite, we're not going to see these massive adoption leaps that we need to do like other functions have done over the last 5 years. So it is time for us as a profession, as a coalition of pricers, to crack the wicked problem.
Yeah, and sort of my perspective here is I think the obligation we have, folks that actually work in this space, is to make it easier, to make it faster, and to make sure we're deeply aligned with sales. If we can be more collaborative, because there is a convergence taking place here, then I think we can scale this industry.
Fantastic, great comments. And so, Stefan, let's turn to your five considerations. And here's the first one.
Yeah, so interestingly enough, my research shows lots of different myths still happening in the C-suite. And when I say the C-suite is not CEOs, it's all the players in the C-suite, which could go from 6 to up to 15 people maybe in the C-suite. And you can read these 8 myths, but they are around some of the I would say lack of knowledge or misconceptions about what pricing is all about. And the first one is, was mentioned to me multiple times by some of the interviewees that I addressed in my surveys. The market dictates price. I do not control my prices. And this is more of an economics view of pricing, and it impacts then, based on the training that some of these C players have received, it impacts the perception of what can be controlled and not be controlled. The second one is really cost is we need to base everything on cost. And this is where a C-suite might be more dominated by finance or manufacturing in the overall decision-making process. And it's also very related to the fear of losing volume in the C-suite. And because they think market share drives profit, they would say we need to protect volume at all costs. So these myths are real, and you hear them in interactions in the C-suite, but also below the C-suite, because at the end of the day, the perceptions then are sent into the organization through the cultural channels. I would say that maybe we are a commodity business. We need to manage price as a commodity business. We cannot lose any customers, and if you raise the price, all the customers are going to leave us. So these are real myths that are still very real in the world today. So another one that's quite interesting and I discovered this one recently, is the fact that some of the C-suite players think that if it's working already, that means someone is managing it using maybe Excel or other solutions, and I don't need to get involved because it's working. I don't have to pay attention. So it's quite interesting, and a lot of the C-suite players will probably look at pricing as a tactical function. Say someone is making decisions, someone is taking care of the transactions, and it's going to work very well in the future. It also is along the line of the make or buy decision, and I recently discovered a make or buy decision still in the field of pricing, where some of the leaders think that maybe we could do a little version of something better than Excel, and it's going to work for us, and we can manage a $50 billion business with some kind of a homegrown pricing tool that might require a lot of manual interactions. But you know what? We've done it for 10 years, so we can continue doing it the way we are. And it's fascinating when you hear this, because you would not hear such a thing in supply chain or forecasting or in maybe analytics or business intelligence. So there is kind of a different perception of pricing here.
Stefan, I really appreciate those variations that you've mentioned. I've run across you mentioned volume and finance folks. I've run across CFO roles in asset intensive industries. My background is in the chemical industry, for example, where they say we have to load the plants. The CFO, the controller role especially, is saying even some contribution to fixed is better than no sale at all. That's true absolutely in the short term, hitting the numbers, but that misses that longer term view of what value are you destroying in the ability of those assets to hit the numbers that you thought you were going to hit when you made that investment in the first place instead of destroying that. Bruno, what are you hearing from the C-suite along these lines?
Yeah, and I would say sort of since pricing is still not as widely deployed, as supply chain or ERP, which by the way, I mean, nobody would even think today to run their supply chain ERP on Excel or Quicken Books. Yet, however, pricing often still is. But I think what's really required is very strong leadership, capabilities inside of these organizations, and then the ability to execute. 1 to 2%, 1 to 3% price increase goes straight to your bottom line. For some companies, that's 10% EBIT improvement. So if somebody in the organization has the capability, what I see is that they emerge and they become a strong advisor to the C-suite, or they're participating in the C-suite and they can execute.
The second consideration to keep in mind when we look at pricing in the C-suite is the fact that lots of leaders see pricing as a cost. and less as an investment. And here I make some very strong, recommendation how to move away from this perception, and especially when you're in leadership in pricing and you're addressing the C-suite. I mean, it requires a lot of discipline and professionalization on how to make business cases. And we need to be as good as manufacturing or innovation or other fields that are excellent at selling their ROI or payback. From the C-suite perspective, though, we need to really have a change in mindset when we look at pricing investments, especially when we're talking significant investments, adding a pricing team, making investment in software, doing a transformation, maybe doing a regional transformation instead of a global transformation. But pricing needs to be moved out of the category of expenses when the times are tough. Then we're going to start cutting on training, cutting on deployment, pushing the deployments to a later date, and it needs to be looked at in terms of what's the ROI, what's the payback, and what's the effort benefit analysis. Because what we're facing is always the C-suite going back and saying, well, I can get a 1% cost decrease in 90 days. I can get it actually starting maybe next month. I'm going to squeeze my suppliers and it's going to go straight to the bottom line. I'm not saying it's going to be as easy as 90 days, but I think there is definitely a way to design our transformation in the sequential, in the incremental phases that can show ROI in 90 days, 6 months, but also look at hey, it's not as difficult as you thought it was. It's only maybe 5 pilots, and then we scale to a division, etc. Another critical component of this concept is the fact that we need to look at risk management. A lot of the time, the C-suite is not. It's difficult to convince them the payback for multiple reasons. One is multiple stakeholders involved in the pricing transformation in these pricing projects, and it's not as clear cut as one function does it and then returns the investments. In pricing, it's a multifunctional, multidisciplinary area, and we have to make sure everybody works in the same direction with a kind of an aligned goals, with a structure that and a roadmap that includes everyone. So we need, I would say, a little bit more attention and intention in the risk management phase of selling the business case, and really show maybe a couple scenarios on what could be an impact on volume, what will be the sensitivity to market share and asset utilization. So it really required, that intelligence, I would say, to minimize the perception of risk, also show clear accountability, who's going to do what, and the clear scope, the clear boundaries, and maybe spread that over a period of 2-3 years with some rollout structure and sequence. Now, the good old days when we had 10 years to do a transformation are over. Right now with the changing environment, we have to be able to accelerate that transformation, because we're facing some disruption, as I mentioned, whether it's e-commerce or low-cost players or changing customer dynamics. So we have to be able to justify transformations in 2-3 years. But really, at the heart of this is pricing is an investment.
Yeah, and just a quick thought here. I mean, I agree with your 5 points here. I think our most successful projects have a very clear setup in terms of a pilot program, what can be expected and measured in a pilot program, and what can be expected in a scaled rollout. Because ultimately, there's sort of two reasons why you would do it today. You need your operational pricing because you need to be able to go fast, and so there's an impetus on suppliers like Vendava and others to deploy very quickly. But second is we need more measurement. So we used to outsource the measurements of the ROI to our customers. And this surprised me, but really only 10 to 15% of our customers would measure on a quarterly basis. So we've started a program now where we actually measure for every customer quarterly. We map it back to what was the business case, and we have the ability to course correct quickly. So I think that's another piece that is critical, and obviously that all of that needs to be floated up to the C-suite.
Another consideration that's critical along the line of our ROI discussion is the fact that as pricing executives, we also have to select the right projects to put in front of the C-suite. So we have to document the impact of obviously, but because there is such a perception of uncertainty and risk in our strategic pricing program, we have to pick the right one, and we got to make sure that the impact is significant. And for me, my rule of thumb is $1 invested, $10 back in profit. And even some of the executives I interact with on a daily basis in the pricing community tell me they don't go to the C-suite if it's not $20 back. So, it's got to be significant. It's got to be well packaged. It's got to be free of uncertainty and lots of moving variable, when we justify it. And as Bruno said before, the charisma and the reputation of the pricing leader going in the C-suite and delivering that business case is also essential. So if you have a track record of deploying very impactful pricing programs, then I would maybe not guarantee, but I would say your chances of getting additional investments might increase when you go with good numbers, good business case, and you have a strong reputation. So consideration number 3 is tackling the phenomena of pricing complexity. At the end of the day, because pricing is multilingual, multicultural, multifunctional, multi-region, and then you go from pricing analyst all the way to the CMO, it is a complex discipline. But a lot of things are complex in the world, and you look at the medical field, you look at biology, you look at complex systems in technology, supply chain. So we shouldn't be, I would say, accepting the pushback from some of the executives that pricing is too complex, and we don't know who's going to do what and how it's going to be done. And if that is the feedback we're receiving from the C-suite, that means we have not done our homework educating up to the C-suite. And maybe there is a little bit of a bottlenecking in between us and the C-suite, depending on how far below we are, how many levels we are under the C-suite. So it is about right now with nimble and agile technology, it is about making them aware that the traditional technology of complexity of technology has gone away. Yes, there is still going to be organizational complexity because you do need to have the salespeople on board. You need to align finance and operations to make sure that the targets are in the systems. IT needs to be on board to be able to embrace technology and integrate it already in the portfolio of technologies that's available. So, I'm not saying it's not complex, but, we've been around for 40 years as a profession and we've made a tremendous amount of progress. And right now, the technology, especially what's being used in more B2C companies, which is more widely, I would say, embraced, I think we can show that companies can do it. It is doable. It is manageable. And I think at the end of the day, my view is that our ability to manage pricing complexity becomes a differentiator for us in the market.
Yeah, this has been a big topic, really inside of Vendavo and for me as I engage in the community. But I think our stance today is a nuanced one, which is we shouldn't lead with complexity, but we should lead with value. So yes, there is complexity, but it's really up to us to show confidence, partner with our customer, solve those problems, frankly, for our customers, and demonstrate that what we're all after is the value that can be achieved and is in front of us.
So consideration number 4 is around resistance that's existing today in the C-suite. So I'm not saying everybody resists. I'm saying, there's going to be, and for sometimes for good reasons, because we haven't done our homework as a pricing profession, there is going to be resistance in the C-suite traditionally from the sales executives that will really focus on protecting the core business and not taking the risk of losing volume. In my research, that topic of losing volume, the fear of losing volume is big. It's still big. And it goes from the salespeople all the way to the commercial functions in the C-suite. That needs to be addressed. I would say here the role of the CEO is essential in making sure that we don't fold, quote unquote, under resistance that's based on the myth that I mentioned before. Make sure that we can bring success stories from other companies, peers in the industry, partners through distribution channels that are doing great work in pricing, going outside the industry and going to see the champions that are deploying all these technology and strategic pricing programs. But it's going to be a reality that some of the players, stakeholders in the C-suite are going to be running, what you see on the screen here, running away as soon as you're going to say, we're going to do a pricing transformation. And there is an immediate connection between we're doing some pricing projects, we're going to raise the price, we're going to lose volume. and it's phenomenal how fast he goes and how strong the resistance is going to be in the C-suite.
So, Bruno, a quick question for you. You're talking to a lot of folks in the C-suite. When people believe that this is a way forward, this is a way to improve the bottom line, what do folks in the C-suite do to address resistance? What would you add to Stefan's examples?
I mean, Stefan is spot on. I would say that if sales is not engaged, if sales is not part of the process to collaboration, then the projects will have tremendous resistance, and frankly, often that's how they fail. But I think what I have seen done very successfully is that if sales compensation is changed to margin as opposed to bookings, so there's a genuine interest for sales to sort of maximize their variable compensation and have an eye towards the bottom line, it can then be actually an accelerator. So that's typically the one of the recommendations I give to the CEOs is, how are you compensating your salespeople, and are they aligned with your business? If it's margin based, they probably are. If it's just volume based, they're probably not.
The last consideration on how we can improve the perception of pricing in the C-suite is really to increase the sense of urgency and to make these leaders aware that change is inevitable. We cannot be in denial, or we cannot bury our head on the sand, because at the end of the day, what's happening in B2C is eventually going to be coming in B2B, and it's already here, and eventually in more of the industrial arena. So the transparency of price, the changing customer needs, the adoption of technology with our customers is going to make us a necessary strength in the go-to-market strategies of these companies. So it's about not delaying the inevitable and doing it, in essence, when things are still going very well. Because as you can imagine, if you roll your sleeve and go to work when you've already started losing volume, or your profitability is eroded by some of the forces that I mentioned before, then that's where typically you don't have the OPEX and the CAPEX budgets to go and do these transformations. So it is about a wake-up call. It is really, and this is what's puzzling to me when I look at these research results that I showed before around the penetration of pricing among the top companies. Some companies are still managing pricing in Excel, or maybe an augmented version of Excel, and they have $200 billion in sales. They have $100 billion in sales. At the end of the day, it is impossible to run, a professional marketing group, a professional sales group without the right pricing technology on board, at least technologies that bridge sales, marketing, and pricing. So it's my famous saying, and when I talk to people, would you run a company without an accounting group, without an engineering group? Or, would you give accounting to finance to manage? Or would you give engineering to production? They would never do this. It is essential that pricing is perceived as an investment, a necessary investment right now in light of the changing worlds that's ahead of us.
Yeah, and I just want to add one quick comment here. I mean, when I look at Vendavo, I would say systems software are much better today than they were 5 years ago, 10 years ago. The focus back then was on operational pricing. Today, really taking science and data, we can pretty clearly determine the perception of value with your customers to ensure that you don't leave money on the table. It seems self-evident you would go for that. It's very powerful. It's much quicker to implement today, and it's something that every company really, in its simplicity, should adopt.
Absolutely, Bruno. And as we spoke about earlier on, with today's business environment, today's forecasts, uh, choosing to do nothing is really choosing to be less successful, less profitable, and less likely to come through whatever tough economic times might be ahead.
Another myth that I didn't mention before is the fact that when we discuss pricing and pricing transformation, immediately the C-suite thinks we're going to do things based on value, and it's going to be very fuzzy in nature, and it's going to be all about customer. So yes, obviously, doing value-based pricing and value-based strategies as part of a pricing transformation is an important dimension. But pricing tools, and those I'm showing some of those here on the screen, can also help you automate your pricing, removing all the manual interactions, accelerate your quoting process, make decisions that are going to be based on science and data, as Bruno said. So here we're not talking about increasing price, just straight increasing price. We're talking about accelerating in the operational side of pricing, but also leveraging data to create new offers to customers, bundles, to create maybe a better opportunity to sell services, upselling, cross-selling. All of this is not increasing price. All of this is growing and giving customers better opportunity to partner with you and additional revenues in essence because they can go out and do better things as well. Some of these tools right here, I wonder today how a company the size of the top 500 companies can live without CPQ or deal management or optimization software because it's in essence with millions and millions and millions of transactions every day. Doing that in Excel or manually, it's time consuming and it's a waste of resources. So when I look at a balanced baskets of pricing tool, what I call the pricing toolbox, I think some will help with pricing intelligence, others will help with the back office, accelerating the back office. Some will help with obviously helping you value-based price your offering by looking at willingness to pay and past behaviors. But this is we've been talking about these for a few years now. And again, back to the inevitability of investing in some of these tools. In the future, I predict probably 10, 20 years from now, all of this will be the new normal because you look at the B2C world today and how e-commerce has changed the game in B2C. You will not be able to run marketplaces and compete against the Alibabas and the Amazon of the world and the Google Supply without some of these tools.
Yeah, and then one of the things that we've done recently, so we got over a decade of operational experience. In the last sort of 12 to 18 months, we pulled all that together into a maturity model, commercial exit maturity model, where then we can actually understand where are you today as a prospect or a customer, and what should you focus on next, and really try to together decide upon what's the best place for you to invest, as opposed to I need to go do everything at the same time.
So you guys know me now. I've shown that slide many times in many conferences and events, and really, the slides are really summarize all the things we've talked about. The world is changing, technology is evolving, and doing the same thing and using the same thinking and making the same investment, looking at the same areas of profit improvements. It's not going to cut it in light of all the forces of disruption and where the business world is going. And by the way, sometimes the business world is going in a direction that it's a bit irrational. And, like right now, the currency wars and the tariffs and some of these, I would say, unpredictable dimensions. If you're an executive today listening to these webcasts and you haven't yet considered pricing as a strategic investment, I urge you to have a discussion and maybe run the commercial excellence maturity model in the C-suite and start discussing, what is it that we're missing before it is too late. Insanity can go so far, and I urge organizations and C-suite leaders to look at that point of no return, where that's the point after which you start running after the problems. When your business is doing well, when you have already an agenda of investments, when pricing is already somewhat accepted and you're not fighting these maybe irrational myths, I think it's maybe time to look at making strategic investments, improving the status quo, and really capturing the payback that's out there. The impact is real, and thinking differently and adopting more of a breakthrough thinking, a little bit of disruption with confidence, I think can change the game for the future.
Stefan, that's a great summary. I really appreciate your insights, Bruno. Some great comments along the way. Now it's time to turn to the questions that have been coming in. For those attending, you can still use the chat box on the Ready Talk application to ask Bruno and Stefan your questions. I'll turn to the first one, and Stefan, I think this one will go to you. I'll paraphrase this a little bit. It says, I'm not a CEO, but I feel that we can do much better, uh, be more profitable with a real pricing function. How do you get a pricing project prioritized for investment?
Yes, so some of that we've talked about a little bit, and I would say if you're a director of pricing today or a VP of pricing and you want to get your investment, in the top five priorities, I think you're going to have to look at this seriously as a strong business case. But it's not going to be just the finance numbers that's going to be important. And Bruno touched on that already. Do you have the capability to deploy and implement and execute? So I think executives are very smart. This is why they're in the C-suite. They're going to look at the payback and say, wow, that's interesting. Maybe $1 invested, $30 back. But then they're going to say, who's going to do the work, right? And so as a pricing executive, you're going to have to convince them that we have the people in place, we have the sales force aligned. There's not going to be a revolution, among some of the functions, and you could get it done. It goes back to what Bruno said. It's capability and the confidence of our C-suite in the capabilities for us to execute. And in the latest book that we published with Andreas Hinterbuber, we talked about, how do you give a little bit more confidence in your sense of execution in the pricing teams? And that's going to be real. Maybe having a PMO, maybe having change managers, having a value team, working with a Vendavo value team to make sure that you really can capture these numbers. That sense of confidence is going to be critical in the C-suite, and I'm talking about confidence in the pricing team.
Thanks, Stefan. That's a great answer. Let's turn to the next question here. Bruno, I'll point this one at you. Uh, you obviously have a lot of conversations with C-suite folks as they embrace pricing as a key capability. What are the common themes that they reference in those early conversations that tells you that they're going to be successful?
I would sort of probably bring it around three different themes. I think the first one is sort of a fast start or a fast project to reduce risk. So no more 12, 18, 24 months, but how do you get a project off the ground that can deliver quickly, to Stefan's point, in 90 days, and you can measure the impact. So that's the first piece. The second is sort of the credibility of the numbers, sort of the measurement of ROI, the business case. So solid business case is required, one that's built jointly, really potentially between in-house folks as well as suppliers. So that's the second piece, is really sort of that measurement system and that credibility of the numbers. And the third is, how do we get appropriate sales engagement? I think CEOs in particular understand that if the sales teams and sales leadership is not bought in, it's going to be harder to execute, because these projects do tend to be around sort of people, process, and technology, and you need those three factors to come together.
Fantastic, Bruno. That it means to me when I hear you say that is that they come in with a plan and they've got some components to that plan with the pilot, the credibility, and the sales engagement. Next question. Let's pitch this one to you, Stefan. Your consideration number 4: resist the C-suite resistors. Those are great points. What about the mid-level and frontline resistors? Does the same thing work there at that level?
So yes, I would say a lot of the times some of these pricing investments or requests will never get to the C-suite, and because there is going to be a bottleneck at middle management level, and some middle manager will not want to take the chance or the risk to go to the C-suite and pitch a project. Another time, I hear through my research that some of the sales leadership, maybe in the middle, and also some of the general managers do not want to increase their targets, because in essence, when you propose a pricing project, you're really increasing your EBIT target, and as soon as you mention that in the through the C-suite, then the targets become reality, and then you have to do the work. So we see a lot of political playing and discussions at the lower level all the way up to the C-suite. And it back to what Bruno was saying, a VP of pricing or a chief pricing officer should be maybe one or two levels down from the C-suite and not too far away, because if you're 6 levels down from the CEO, then chances are your message, your business case, the perception of pricing are going to be different along the way, all the way to the C-suite.
Sure, that makes sense. There are different tribes, if you will, where those politics of pricing feels like that's taking some power away from those tribes. So the politics and making sure that people are aligned, that really is a top-down kind of message that needs to be pushed through. Uh, Bruno, this one's to you. Stefan's point number 5 was don't delay. Again, this is related to your conversations with CEOs. What are the points that they mention that drive them to have action now, to take action now, rather than delay and have those efforts stall?
And I would sort of bucket it in two groups, sort of the negative pressure. So there's definitely market pressure, margin pressure, whether you're a public company or even a private company, you need to show improvement in your bottom line. You need to show improvement in gross margins expanding. So I would say that is definitely top of mind. The second at times is survival. I mean, it's disruptive out there, as Stephan has often pointed out. So the ability to really zero in and understand how do you increase EBITDA is critical. So those are sort of on the the heavy pressures that are faced by CEOs and C-suite executives. I think on the positive side, what I do see also is sort of bold targets, bold results. I was recently with one of our customers in Switzerland, and the VP of pricing sort of wanted to minimize the results in the C-suite meeting we had set up, and I think we were targeting 15 million of benefits, and we were halfway through the year and getting there. And once we got to meeting with the C-suite, really what they were looking for is 30 to 40 million. And arguably it's very achievable, but it takes the collaboration with sales, takes the collaboration with other folks in the organization. So I think that meeting changed dramatically once we had a real conversation on what is really possible, and it engaged the other folks, the other C-suite executives to go after. So I would say sort of this idea of bold targets, Stephan pointed this out, is a real positive with CEOs.
I can add one more here. It's sometimes the change is going to come from the customers, especially when if you're a global player and you are not managing your pricing corridors, your gray markets. And I was recently discussing that with a VP of pricing where the customers were so upset with gray market and parallel imports and exports that they started picking up the phone and calling the CEO and say, you need to better manage your pricing. You need to be more transparent. It's a mess. And a lot of the times now with these tariffs and these changing in the world environment, the pressure is going to come from the customers straight to the C-suite. So they're going to have, no choice but to manage their pricing better.
That makes a lot of sense, Stefan. And Bruno, both of you touched on really important points there in the sense of it's important to have kind of a burning platform. It's also important to have that positive thing that you're striving for. And that can be put in the context both externally when you're looking at what's going on in your market and internally with what's going on in your organization. Okay, one last question here. And Bruno, this one for you again. You mentioned Vendavo had efforts to measure the value being delivered. Bruno, I think that would be our value consulting group. The question here then is that like change management?
Well, so I mentioned that so today, it's critically important for us to work alongside our customers and sort of measure the impact of people, process, and technology. So this isn't necessarily the software by itself, but it's the collaboration between the software, the ambitions and the targets that are set, and then the execution against it. And as I indicated, really only 10 to 15% of our customers measured. We now measure for every single customer. Super important. We course correct. We set a business case, and yes, we actually work often around change management. But really, it's a sort of business consulting side of the business that I think is critically important, so that we can achieve the targets that we set out. And we're not just there to implement software.
Fantastic. I really appreciate that perspective. I think that will conclude our discussion today. I want to thank everyone that joined us via webcast application. If you weren't able to get your questions in just now, don't worry. We'll reach out shortly with answers from Bruno and Stefan. And of course, we'll be sending out a summary of all the Q&A from the webcast and a link for this playback for this coming to your inbox soon. So Bruno, Stefan, thanks very much for joining us today.
Thank you.
Thank you.
And so to everyone on the phone, looking forward to having you join us at our next Vendavo webcast. And until we meet again, have a profitable day.